Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. The market started the day lower and we are now sharply as I'm recording this video right now. The NASDAQ is still lower and we're seeing that rotation again into banks out of tech, as the chart that I'm watching and I've been watching so far this year is the 10-year yield. Now that is up. It's up over 165. That's up over 10% just to start the year, which is a big move for that chart. And all of 2021, when rates went higher, we saw the same story. Banks were higher, tech was lower. That's been the story so far this year. We're seeing this rotation as these interest rates go higher. Now, it's interesting to note, though, while banks are higher, tech is lower, another winner so far this year is consumer discretionary. So that's telling me that in spite of this inflation, in spite of the supply shock problem we had at the middle of last year, that's starting to unwind and people are accepting and paying higher prices. And these companies are not having any issues with this higher inflation. So that's going to be an important story for me to start the year. And the second part is if the Fed is able to keep the inflation out under control, away from this runaway inflation, and if it's able to keep the economy moderately strong, and if it can do those two things, which is, I know, a lot to ask, I think this the start of the year is, and the market could be in store for another good year. So I'm looking at inflation, I'm looking at economic growth. If those two things can be positive, I think there's no reason to think we can't see another year, a good year for the S&P 500. In the VIX, it started the day higher over 17. We're now back under 17. We're at 1676, so it's down, 23 basis points on the VIX. So interesting. We're seeing that come in. Of course, the S&P 500 is flat. Now, there's still a big increase between where the cash is and that January future is. We do have a holiday in between that expiration, so maybe it'll pop up after that. But still, we're over 19 in that future, under 17 in the cash. Something's got to give, and right now, investors are saying that there's going to be some volatility as we're leading into February, which of course is a volatile month. For Equity Armor Investments, I'm Joe Tigay.